Haha, guys, I think we have it. So I am live right now on YouTube, Facebook, and Instagram, across all three. So we're working on getting kind of a new studio set up for videos, but right now, this is what we're gonna work with right now. So I'm in my office at home right now. And I'm bringing to you today, guys, the RE Zone. So it's Wednesday at noon. We're gonna be doing this every single Wednesday. A lot of times it's gonna be myself, it's gonna be my partner. Will be on here with us. Let me see if I can change this real quick and put this up higher. I might have some guests on, but we are talking about all things real estate today. Across all three social media, so Instagram, Facebook, and YouTube. So this is awesome. So I want to talk today, we're going to be talking about all things real estate. Ask questions, anything that you want, and I will be happy to answer them. But really, it's going to be kind of outlining why you should be investing in real estate, the different avenues to invest in real estate, and the different ways to get started investing in real estate. And if anyone has seen and has some sort of idea of what's going on in this country right now, you would have seen the other day the market was up almost 500-600 points based on rumors with trade talks with China, and then down yesterday 700 points on worries that it wasn't going to happen, which is exactly how the market works, guys. It's up, it's down, it's rumors, it's gambling, basically. You're better off walking into the casino and plopping $1,000 down on black or red, or at the blackjack table. Whereas when you're looking at real estate, guys, it is a hard asset. We know the market is going to continue to appreciate, sometimes slower than others, but it will continue to appreciate if you are in the right real estate market, meaning invested in the right type of property. Not every single property is a good investment. Guys, stay away from single family homes as investment properties. Why are you investing in single family homes for investment property? It's just stupid. What happens if your renter leaves, right? Then you're stuck paying the mortgage on a single door property, right? It's stupid. You're putting all your eggs in one basket with one person, and it's just a recipe for disaster. So we are a firm believer, and what we do is we invest solely in multifamily residential real estate, anything with 100 units or more in key markets around the country. So where are we looking? We're looking in Florida, we're looking in South Carolina, North Carolina, Georgia, Texas, Arizona, California, Oregon, Washington, Kansas City area, Oklahoma, key markets that have good multifamily real estate markets, where you're going to see a high occupancy rate, rents increasing year over year, and good value add opportunities. And anyone throws number-wise, I'll be happy to tell you if it's a good deal. I'll be happy to tell you what I would pay for it. It's really easy to look at it based off numbers. It's strictly a numbers game to generate or to determine if it's a good buy or not. Cap rates, NOI, your net operating income, will basically tell you what the property is worth, what you can pay for it. Guys, the only way to make money doing this is by using leverage, right? We're taking the money that we have for down payment, we put 20% down, we're leveraging the rest through the bank. That's how you make money. You're using your rents, which is your cash flow, is going to give you your appreciation. You can refinance it down the road. You can pull your cash back out. You're moving on to the next property while you're still generating revenue every single month, every single year, year after year after year. So guys, multifamily real estate is where it's at. It's where you're going to generate the big returns. It's also where you're going to generate the passive revenue on a monthly basis. And if you've been following me, or if you just started following me, but if you've been following me, you know I have my company, Archery Capital Partners, alongside my real estate teams in the different markets that we're in. But Archery Capital is specifically for you guys to help everyone start investing in multifamily real estate It's no longer just for accredited investors. We are registered through the SEC, Regulation A+. We can raise up to $50 million in each fund. We are on our second fund that we are raising money for. We are currently purchasing about $100 million worth of multifamily residential real estate right now with our previous fund and those partners. So guys, if you want to start investing in multifamily real estate, this is the time to do it. You can start investing with as little as $1,000 and you can start building your financial future. You will start seeing income, a return on that from month one once we have closed the fund out and started purchasing properties with that fund. We pay 8 to 9% on a yearly basis. You get that in the form of monthly dividend checks. We split our profits with you at the end of each year. 65% goes back to our investors. And when we exit the property, same split, 65% goes back to our investors. So you're seeing a 21, 22, 23% IRR, individual rate of return. Your total overall return, guys, 2.25 to 3 times your initial investment. You want some easy numbers? Let's throw them out at you. $100,000. We're throwing it, let's say we put $100,000 in. At the end of the term, 5 years to 7 years, you are going to get back between $225,000 and $300,000, guys. It's a no-brainer. If you put $100,000 in the stock market, where do you think it's going to be in 5 years? I can pretty much tell you, you're not going to be anywhere near 200 grand. You might be 115 to 130 if you're lucky. And so guys, that's why when you're looking at a fund like ours, the returns you're going to get by investing into a private equity multifamily residential fund like ours, you're not going to see those returns anywhere else. If you were to try to do that yourself through individual flipping and rehabbing or a 4-unit property, it's going to take you 10 times as long to see those returns because your returns are going to be so much smaller. And let's talk about it, guys. So if you buy a 4-unit property, right, what happens if 2 of your renters leave? You're down 50% on your monthly cash flow, right? Right. But if you have a 100-unit property and 2 of your renters leave, what are we? We've lost 2 out of 100, right? We still have 98 renters generating cash flow for us on a monthly basis. It's a no-brainer, guys. Scale up, reduce your risk. Most people think it's the opposite. Scale down to a smaller size reduces your risk, but in actuality, you're not. You're increasing your risk. You're increasing your rate of failure. You're increasing the possibility of losing your monthly cash flow. You're increasing the possibility of losing your property if you can't make the bills. It's just how it is, guys. The market shifting. What happens when the market shifts? I'm in real estate every single day in two different facets. Large multifamily and then residential sales, guys, with my sales teams, both here in Pittsburgh, in Houston, and Florida. The market shifting. What happens when the market shifts? We're typically on a 10-year cycle, guys. We are at the end of that 10-year cycle right now. We are starting to see the market shift. It's going to be no longer a seller's market. It's coming into more of a balanced market, and then going to end up turning into a buyer's market. What happens then? Well, people need to downsize. People need to reduce their expenses. What do? They sell their homes. Where do they have to go? They have to go somewhere to live. A lot of times they're moving into multifamily residential units. So actually in a down market, in a good market, multifamily is a great investment. In a down market, it's even a better investment because our occupancy rates are higher, our rental rates are actually higher, and our default rates are lower. It's just a great investment for people to get involved in. And so when I'm seeing people doing fix and flips, and when I'm seeing people doing rehabs, and when I'm seeing people do all these high risk, it might be a low dollar amount, but it's still an extremely high risk properties, it's just mind-boggling why they keep on wanting to do it. So like I said, guys, scale up, reduce your risks. It's just the best way to go. Ask me questions, guys. For all of you watching, feel free to ask away. I'm happy to answer any questions you guys might have. Otherwise, we will, I'm just going to review a few more things for you and kind of talk and dive into the numbers a little bit more as far as how to look at individual properties. So if you have any questions, ask away. If you guys have any properties that you know of, large multifamily condo apartment complexes that you know of that are available to purchase, I want to see them. We look for anything 100 units or more, up to, well, an individual property right now, we're looking up to about $40 million per individual property. We're looking to have about 100 million purchased within the next 6 months. So if you guys have anything, send them my way. We are purchasing, we are buying, we want to see everything you guys have. And so what else? Boy, guys, come on, ask me some questions. Trying to think what else I can review for you guys here when it comes to multifamily and investing in multifamily real estate. Let's talk about numbers, all right? So let's say we have a $20 million property. We're putting 20% down, right? So we're going to put $4 million or so down. We're going to finance that remaining 16 million, guys. That 4 million that we put down comes from us and our investors, like you guys. And that's what we pay you guys on, right? So we have to look at our net operating income. And I don't have any properties pulled up right now to kind of review for you, but a $20 million a unit property should be generating, where's my calculator? Let's see here. Thought I had one. The kids must have ran off with it. Let's just see it. So a $20 million property should be generating $2.5–3 million NOI a year. So $2.5–3 million NOI is going, and that profit is split 65–35. That's 65% is going right back to you guys, to all of our investors at the end of each year. So it's just a great investment, guys. And that's appreciation, right? So $20 million in 5 years, we're looking to sell that property for about $40 million, get 100% return on our money. And again, that profit goes right back to our investors, to all you guys. And we just do it all over again. Next Wednesday, I will have a breakdown that will kind of break down individual properties and the numbers for you. But it's real simple to just back numbers in to see if it's a good investment or not. And so, for us, it's a no-brainer. We can look at a property and say right off the bat, yay or nay, if it's good or not. And we go through a ton of properties before we find one to buy. I think we have about 5 or 6 right now that we're getting ready to put under LOI, letter of intent, that will equal about $85 million in properties. And that $85 million is going to return to us $7–8 million a year in profits. Just a great product, great investment, guys. Great product. Since everyone else is pretty much done, I'm going to go ahead and sign off now. If you guys have any more questions, feel free to post them in the comments on this video when we're done. And I'll see you guys next week. We'll have more details for you next week as well. All right, guys, have a great day.